Let's bring in our market panel to break down today's action. Joining us now, Ryan Detrick from Carson Group and Michael Sansoterra from Silvant Capital Management. Good afternoon to both of you. Unchanged, Ryan, on the S&P. I mean, man, what a difference a week makes after the stark sell-off we saw last Monday. I mean, we talk a lot about seasonals in August, but here it is.
No, you're right. Thanks for having me back, Morgan. Appreciate it. And yeah, what a difference a week makes, right? I think it's really impressive. We had that big drop last Monday. That's not the impressive part. Then Thursday, we had obviously a big rally. What's happened the last 2 days? Like nothing, right? It's almost like watching paint dry, which we think is a really positive thing. But I think it's so important. I know a lot of guests have pointed this out. For whatever reason, August tends to be that month where these out of the blue, a lot of time international things, right? Iraq invades Kuwait 1990. I know the U.S. debt downgrade. And then the one I think is a lot like 2015, the surprise Chinese yuan devaluation. That was the first 1,000-point drop ever in the Dow. And that was one of the more recent times we saw a 50 spike in the VIX. That sounded a little bit familiar, and that was a fairly significant low. So we get into all the details. We think the economy is just fine. Slowing, yes, but not a recession. And this is just your August volatility, which is normal.
All right. Love the references from history. Going to dig into that a little bit more. But first, Michael, want to get your thoughts here, especially as this does feel like it's the calm before the storm. I realize we're talking about low volatility. We're well into August now. But we do have a number of potential catalysts here for this market at a time where investors are trying to get their footing, whether it is some of the retail sales and retail earnings we're getting, some of the tech earnings we're going to get this week as well. And then, of course, perhaps the biggest, the inflation data.
Yeah, no question. We're about 85% of the way through earnings. So now we're looking back to more macro data until we get NVIDIA in a couple of weeks, which I think will be a bit of a bellwether moment as well. But I would agree with Ryan's output, at least at the end there. There's no question that the growth has been slowing, but does not appear to be recessionary. So as long as the data doesn't drastically change, we've seen inflation sit pretty tight. Lower, but not a lot lower. And at the same time, we didn't see the jobs number get notably worse in July, which I think is sort of in that long-term Fed range from an unemployment standpoint. It looks like things are still on track for growth, and that's a good thing. So now we wait. We watch the paint dry until we get some more data.
Ryan, Russell 2000, the small caps, down almost 1% today. It was really the big cap tech names that led for the market, and you saw that with the NASDAQ eking out a gain here on this Monday afternoon. The rotation we were talking about before we got a correction or a pullback, depending on what average you're looking at, does that still have footing here?
Now, we think it does. And again, it does come down to inflation, which we're going to find out with the CPI coming on Wednesday. And Mike pointed out before we joined, right, the 3-year expectations on inflation, according to New York Fed, is the lowest it's been in the time of their survey, which is at least 11 years. So we're seeing inflation coming back. And we do think, the idea that Fed rate cuts are coming. Yes, we're in the camp. Maybe they should have cut before, but maybe we get 50 in September and then kind of reevaluate. But the bottom line, again, is the economy's strong. I mean, look at productivity numbers, right? We haven't talked about this yet. Productivity has been really strong in our country for over a year. The last time we had extended strong productivity was the mid to late 90s. Another time where the Fed was able to cut a couple times, wages stayed high, economy wobbled, but then expanded higher. And again, we think, this rotation trade, you want to call it that. I mean, we like industrials. We like financials. We do like small and mid caps as well. We're overweight those areas. We don't see a recession, and small and industrials and financials led last week, and they're hanging in there again. And we think those are some areas that are still going to do pretty good the rest of this year.
Michael, what are you buying here?
We still like the stocks we've liked pretty much all through 2023 and into 2024. We like NVIDIA on this pullback. That's been one of our long-term holdings. We've owned it since 2020. We think that's still got the best fundamentals in the space. And despite the fact that there's a lot of fear and hand-wringing around the DOJ potentially looking at them, as well as some of the issues around the Blackwell launch, we think NVIDIA continues to do well, continues to dominate. This is a very long-term prospect on the generative AI story. We like Eli Lilly and healthcare quite a bit. We're big fans of the Deutsche Bank upgrade today, also a stock we've owned since 2020 in the Focused Growth Fund. And, our goal here has been to just ride these trends when the expectations are wrong. We've seen 2020 expectations for the Monjaro market was $250 million on the sell side. And then 2 years later, they did $5.2 billion. So we know that number continues to just exceed investors' expectations. They continue to grow the market, expand the market, reprice the market. We think that works well in healthcare. And from a sort of a little bit of a cyclical growth name, we're big fans of General Electric, believe it or not. Not a stock we thought we'd own for a while, but the conditions for growth were met. The key metrics were inflecting. And as they continue to do exceptionally well at the one thing they've always done well, which has been aerospace and defense, particularly engines, we like the short body and the narrow body plane engines with the LEAP deal. And we like the slow but steady recovery at Boeing at some point when we see more production from both Boeing and Airbus. Keeps those engines getting sold, keeps those service margins rolling in. We think General Electric's got good prospects going forward as well.